Right. Hi, good morning, ladies and gentlemen. This is a microphone check. This is a microphone check. Hi, two. Mic 1, 2. Try 2. Hi, 2. A mic check. Don't know. Hi, check. I thought you had it. No problem. Hi, try check two, mic one. This is a mic check. Hi, two. Try two, mic one, two.
Recording in progress. We all hope to be financially independent someday. However, retirement planning for most people does not sound as exciting. Why should I forgo today's luxury for tomorrow's comfort? The purpose of retirement planning is to enable you achieve financial independence, at least by the time you retire, whether voluntarily at a predetermined age or mandatorily at age 60. With a clear roadmap, commitment, and discipline, you'll be able to maintain your lifestyle on passive income and live on your own terms for the rest. Pension trusts partners workers throughout their retirement planning journey to ensure they are on track to retire with dignity. Visit the Access Pension website to take advantage of peace of mind. Pension trust. We all hope to be financially independent someday. However, retirement planning for most people does not sound as exciting. Why should I forgo today's luxuries for tomorrow's comfort? The purpose of retirement planning is to enable you achieve financial independence, at least by the time you retire, whether voluntarily at a predetermined age or mandatorily at age 60. With a clear roadmap, commitment, and discipline, you'll be able to maintain your lifestyle on passive income and live on your own terms for the rest of your life. Access Pension Trust partners workers throughout their retirement planning journey to ensure they are on track to retire with dignity. Visit the Access Pension website to take advantage of our various personal pension offerings to achieve financial peace of mind. Access Pension Trust, your reliable partner in pensions.
As we celebrate our 10th anniversary, it is important to also reflect on our journey as a company. What started 10 years ago as a software company today has become a key pillar and a player in the pensions industry. Today, the role of Access in shaping the pension industry is very evident. In the last 10 years, we've been recognized by the World Pension Summit as the best pensions provider in the area of innovation in risk management. And this was mainly as a result of our constituent fund and life cycle investment strategy. I'm also happy to say that Access has struck many industry firsts. We, as a company, we recognize that we owe Ghanaians a duty. And so we are leveraging our 4 branches across the country to deepen pension coverage. In the last 10 years, we have conducted customer education programs, financial literacy, and retirement planning seminars across 15,000 establishments. And I'm happy to say that this activity has touched over 300,000 workers. I believe duty has fallen on us as a company to chart the path for accelerated economic development of Africa through the mobilization of savings. If you consider the fact that only 8% of Africans are covered for pensions, it suggests there's a lot more companies should be investing in, and Access wants to be at the forefront of this. So in the future, we aspire to be a strong Ghanaian institution with regional prominence across Africa. And this expresses our Pan-African aspiration as a company. So our avowed commitment as a company in the next 10 years is to be a force for good. We think that companies should impact societies in which they operate. Companies should lead the way in solving societal problems, and that is the commitment we at Access are making. So in the next 10 years, we are going to be investing heavily in financial literacy education across the markets in which we do business.
Good morning and a very big welcome
to play a lead role in
to the 5th Annual Open Forum for the Cedar Pension Scheme, brought to you by Access Pension Trust. Access Pension Trust, your reliable partner in pensions. Before we begin, we'd like to take an opening prayer from one of our colleagues here in Access, our brother Cyril Nkrumah. So Cyril, please join me as you lead us in prayer to start. Thank you.
Good morning. Shall we pray? Father, Lord Jesus, we thank you for our clients, our managers, the staff, shareholders, trustees, fund managers, custodians, regulator, our partners and stakeholders. We thank you that we are here for this 5th Annual Open Forum. Let the discussions be fruitful and let the discussions be one we are able to make very good decisions from and implement. Amen.
Please let's put our hands together for Cyril for that powerful prayer. Thank you. Once again, you're welcome to the 5th Annual Open Forum for the Cedar Pension Scheme. It's brought to you by Access Pension Trust. It's always a joy to come your way because at such an event, we get to report to you, give you all updates on the scheme and even events in the country. We also get to take feedback from you. That's very, very important to us. And so we encourage you to share your comments, your questions, and any feedback you have with us in the chat box. Your questions will be answered, some of them live during the program and some of them in the chat box. Before we begin everything, we'd like to take an opening remarks from the CEO of Access Pension Trust. He's in the person of Mr. Efriye Owari. Efriye, good morning. If you can hear me, please, we are ready for you.
Good morning, Opare, and good morning to members. Can you hear me? Opare, can you hear me? Great. So good morning, ladies and gentlemen. You are welcome to the 4th Cedar Pension Scheme. And as you know, this event is organized to member engagement and trustee accountability for their stewardship of your retirement savings. What started as a nascent industry in 2012 has become the mainstay of your retirement pot. The private pensions industry today manages over 40 billion Ghana cedis of assets, and this is approximately 3 times the net assets of SNIT. And what this means is that your account with Axis is increasingly becoming an important source of your future retirement income. To achieve a dignified retirement income, it is imperative that the purchasing power of your fund is preserved. Sadly, the events of our recent past have been rather uneven. The assets of SNIT has hovered around 2 billion, around 2.3 billion in the last decade, and fallen from 2 billion in 2021 to 1.1 billion in 2022, and this is an estimate. Similarly, the combined assets of Tier 2 and Tier 3 schemes across the pensions industry has declined from $4.6 billion in 2021 to 2.9 billion in 2022. In the last 18 months alone, approximately 70% of the purchasing power of your retirement savings has been eroded by inflation. This is the systemic risk we are living with. In anticipation of the recent economic meltdown, we at Axis took some proactive steps to avoid the worst outcome for your fund. We shifted about 36% of our assets into Eurobonds to protect your savings against complete value erosion. And this was anchored on the belief that foreign investors will suffer the least in a debt restructuring. After all, Ghana will continue to need foreign investors to finance future budget deficits. And those of you who are economic watchers know that budget deficit has been a recurring thing for Ghana. So we thought it prudent to align our interest with foreign investors. Cash is a risky asset to hold in a hyperinflation period. We maintain our average equity positions at 6.5% across our 3 master trust schemes in 2022. And I must say there is room for improvement. This compares favorably against about 1.1% equity allocation for the average pension fund in Ghana. Equities will rebound when the economy recovers, and thus it is considered a hedge against long-term inflation. In the past 3 years, we committed approximately 10% of our assets to alternative asset classes and have so far invested about 2% of that allocation into private equity funds. We believe investments in the real sector are not only vital for economic growth, but long-term value creation for your pension fund. Faced with the limited options, we also maxed up our exposure to gold ETF for tactical reasons. For our Cedar Provident Fund, the MPRA's investment guidelines places emphasis on listed securities. And that's a big limitation we have as an industry. However, in many transitional economies such as Ghana's, private markets are much bigger than public markets. For instance, credit to the private sector in Ghana, mainly consisting of bank loans, is approximately 73 billion Ghana cedis, as against 616 million cedis of listed corporate bonds outstanding as of June 2023. When juxtaposed against free float shares, the Ghana Stock Exchange cannot even absorb 5 billion Ghana cedis investment from pension funds. So practically, our hands are tied. Investment options aside government securities are very limited for effective diversification of your pension fund portfolio. And so to get some conversation underway, we applied to our regulator, the NPRA, for an increase in external investments to 20%. Though our request was denied, we believe continuous advocacy by the pension chamber can help achieve some good outcomes in the medium term. We are therefore positioning ourselves in advance to enable us take advantage of external investments when the regulations allow. Thanks to the instrumentality of the organized labor and the advocacy of the pensions chamber or the Chamber of Corporate Trustees, pension funds were exempt from the initial DDEP, which I believe most of you feared was going to completely mess up your assets. However, to enhance tradability and ensure pension funds are prioritized for coupon payments, the Ministry of Finance has initiated an enhanced DDEP for pension funds. And your trustees have decided to accept and exchange our old bonds for new bonds under the enhanced terms, as the deal offers a better return and cash flow certainty. It must, however, be stated that the bond maturity extension in the enhanced DDEP for pension funds has implications for liability management. Bond markets still remain shut for now, and maturities will be paid in 2 tranches in 2027 and 2028. So effectively, we have very limited resources for unplanned withdrawals. I want to say that the worst of the economic crisis we have seen in the last 18 months may soon be over. But let's be clear, there remains the need to save more to recover what has been lost to inflation. Persons approaching retirement have little time to rebuild their retirement savings. Hence, their Tier 3 may become an important source of additional retirement income. For those retiring after 5 years, the power of compound interest can still work its magic for you. But there is the need for you to save more to offset the effect of inflation. This can, for instance, be achieved through contributions into a personal pension account, of which we are a market leader. We therefore admonish employers to earmark benefits in their employers' Tier 3 pension schemes for the payment of terminal benefits or as a source of supplementary retirement income for their workers. Also, measures should be taken to save up windfalls and salary increases to boost their employee retirement income adequacy. Without these, I dare say, many will fall into poverty when they retire. And so the trustees of your pension scheme and executives of Axis Pension Trust are on this webinar today to account for their stewardship. With us this morning, we have the chair of our board of trustees, Mr. Robert Benning, Mr. Matthew Money, a trustee, Mrs. Dorcas Okante, a trustee, Mr. Daniel Sapon, a trustee, Mr. Samuel Tobwatin, a trustee, Mr. Samuel Enin, a trustee, will all be on this call to answer your questions. These are persons of skill, competence, and proven integrity who have accepted the duty and the responsibility to be your trustees. Also with us today, Mrs. Louisa Siao, the compliance manager and our corporate lawyer and board secretary to the board of trustees, Mr. Nanariafe Boama, the chief investment officer of Access, Mr. Parkofi Ankuma, the general manager of Access, and Mr. Collins Owusu Tamate, your fund administrator, are also on the call to assist with your questions. So please, this is your forum. Feel free and ask any questions that may agitate your mind about the management of your pension fund. We are here to provide answers as best as we can. Thank you very much for your participation in this event. Our best wishes to you.
Thank you very much,
Thank you.
Mr. Yawari, for that powerful opening remarks. Would like to also acknowledge the presence of independent auditors, that's John Kay and associate, represented by Gilbert. We also have the custodian of the schemes, which is Zenith Bank, here with us as well. Thank you. It's going to be a very informed and powerful program. Ahead of us, we're going to take a presentation from Nanariafe Boama. We'll also take a presentation from the chairman of the board of trustees, and also another presentation from Mr. Parkofi Ankuma, who is the general manager of Access Pension Trust. So straight away, we'd like to move on to the presentation by Nanariafe Boama. Nanariafe Boama, and he's going to throw more light on the investment strategies, the performance and outlook for next year. But before Nana comes, we'd like to take a presentation from the chairman of the board of trustees. He's in the person of Mr. Robert Benin. Please, let's give him a round of applause as he takes us through. Thank you.
Good morning, scheme members. I want to express my profound gratitude on behalf of the Board of Trustees of the Cedar Pension Scheme for the opportunity given Access Pension Trust to manage your hard-earned money. We understand that for most of our clients, their Cedar Pension Scheme constitutes their largest savings till date. We therefore do not take the opportunity granted us to manage these resources lightly. We promise to remain a faithful fiduciary in guiding and helping our members achieve their retirement goals. We also want to welcome you to the 4th annual Open Forum for the Cedar Pension Scheme. My remarks today are structured to touch on the global economy, as well as the Ghanaian economy, the scheme's assets positioning and return for 2022, which will dovetail into a brief education on investment risk and end with the general scheme operational update. The global economy in 2022 experienced significant challenges, from the war in Ukraine and growing geopolitical tensions between China and America. The resultant effect of the global uncertainty was felt by almost all nations, resulting in increased energy and food prices, mounting inflation rates, rising interest rates, and volatile markets. The Ghanaian economy was not spared and was heavily impacted by the Ukraine war that disrupted global food and resources supply chains. These, coupled with our local economic management weakness, plunged the Ghanaian economy into an unprecedented debt and fiscal crisis. Ghana's economic indicators spiraled out of control during the year under review. Inflation, which began the year at 13.9%, closed the year at 54.1%. Interest rate on the 91 days and 22-year Treasury maturities increased from 12.52% and 16.74% to 35.36% and 36.10% respectively. The city saw the steepest depreciation since 2014, closing the year down by about 30% from the beginning year rate. To stem the tide of the fast failing economy, the government of Ghana announced it was going to seek monetary support from the IMF. It is believed that an earlier announcement to seek IMF help could have averted most of the pains the economy experienced in 2022 and is still going through now. To bring the nation's debt to sustainable levels and also qualify for IMF financing, the finance minister announced a domestic debt exchange program to help reduce the country's debt to GDP from the current 102% to about 55% by 2028. Government bond holders have had to take significant interest rate discounts as well as extension in their bond maturities as a result. In spite of the unsettling landscape, your pension scheme experienced another strong year. Over the course of the year, we shifted our asset allocation away from Government of Ghana securities and significantly increased currency diversification within the portfolio by growing our Ghana Eurobond allocation and exposure to the ABSA New Gold ETF. The effects of the depreciating currency and the gold's rising performance in 2022 resulted in an average return of 32.2% for the scheme's constituent funds. This return represents 1.2% return above inflation, average inflation benchmark of 31.0% and 5.2% above inflation over the last 3 years. Total asset under management represented by the scheme's net asset value for the year end December 2022 was 478 million Ghana cedis, and this is an increase from the figure of 337 million we had in 2021. Each year at our forum, we use the opportunity to extol the virtue of long-term investing as it relates to investing for retirement. This year, we want to use the opportunity to highlight the often neglected subject of risk as it relates to investing. Risk refers to the degree of uncertainty and or the potential loss inherent in an investment. Every investment decision is subject to risk. The risk comes in multiple forms. I will highlight 4 common risks that directly affect the Cedar Pension Scheme. The assets and the management are subject to credit risk, where a potential issuer, government and corporates of securities fail to honor their debt servicing obligation. Our investments in fixed interest rate securities also present another risk called interest rate risk. Interest rate risk occurs when changes in the direction of rates affect the market value of securities held by the scheme. Since interest rates are Constantly changing, values of investment assets such as bonds, treasury bills, and real estate also change in relation to the changes in interest rates. Mark to market, which became a talk of town in 2022, relates to the value of fixed income securities falling when interest rates rise and vice versa. The asset management industry, through their regulator, took a bold step to force their members to reflect changes in interest rates, which is marking to market, on their portfolio daily. It is the international standard for valuing securities, and it is expected that the pension industry will follow suit in the future. There is also currency risk, which relates to the value of an investment in a base currency changing due to investment in assets in other currencies. Currently, the fund's assets have some substantial exposure to the US dollar, and therefore movement in the currency will have an impact on the daily value of the fund. To bring it home, anytime the Ghana cedi appreciates relative to the US dollar, clients' balance will reduce to reflect changes in the currency. Lastly, the scheme's exposure to stocks on the Ghana Stock Exchange exposes scheme members to equity risk. The risk of investing in equity includes share price falls, receiving no dividend, or receiving dividends lower in value than expected. The above risk exposes our clients to daily movements in the account balance in the short term. There will be periods where clients' balances will reduce when the above mentioned risk move against the schemes. There will also be many periods where client balances will go up. Overall, in the long term, we do expect that the up periods will outnumber the down periods and ultimately deliver growth to you, our cherished clients. To summarize, every investor in today's market shall be subject to market risk. Investment is not a free ride. It is only a Ponzi scheme that can promise and guarantee a return equivalent to a 45-degree angle line on a continuous basis. Legitimate and genuine investment programs are characterized by bouts of up and down movements. In investing, there will be periods of pain and many moments of glory. It is the disciplined investor with long-term perspective who will live to see the glory days. We believe the only way to build trust is by communicating frankly with our clients. We continue to engage our clients through multiple channels, including periodic engagements online and physically. Our daily show on Sunny 88.7 FM in Accra, our pre-retirement seminar, and this annual open forum, these are means of engaging with you on a regular basis. The essence of this engagement is to give account of the stewardship of your money. We are proud to have also sent multiple client memos to update our members on the management of their investments in 2022, especially due to the fluid and fast deteriorating local economic indicators. These memos, we believe, as fiduciaries, help us keep you updated on key decisions, especially during fluid situations which may not permit a meeting within the short term. We will continue with this initiative in 2023 and beyond to walk this journey with you and to keep you informed of major decisions we take on behalf of your fund. On behalf of the Board of Trustees, I thank all participating employers and scheme members for your continued trust in our stewardship of your financial resources. Have a great 2023, and let's keep investing for our future. Thank you.
Oh, please, let's do it better for Robert. Thank you. And he's actually set the tone right that this year want to highlight risk and its relation with investment. And to continue that, would invite the Chief Investment Officer of Access Pension Trust in the person of Nanaria Feboama to present to us the investment strategy and performance and outlook for the year ahead. I'd also like to remind you that you can share your questions and comments with us in the chat box and we'll attend to them. Thank you.
All right, thank you very much. So good morning to our dear scheme members. So my goal today is to present your pension scheme's performance for 2022 and outlook for the year 2023. But before we go into the main issue for discussion, it is important I throw a bit of light on the macro and the microeconomic environment within which your scheme operates. For many of us, 2022 was indeed a year to forget. Almost all the macro indicators spiraled out of hand. After government intransigent, after several calls from mid-2021 to seek help when it was obvious the economic sink was sinking, they finally did the right thing and announced an intention to seek IMF help in July 2022 to stem the tide of the economic bleeding. The IMF bailout, of course, came with difficult conditionalities in a bid to reduce our debt to GDP from a high of 98% to about 55% in the medium term. To get to this milestone, the government announced a DDEP. Amidst all this, 2022 GDP print came in at about 3.1%, driven by slowdown in global growth, difficulties around global supply chain, high global inflation, and tightening financing conditions, which saw one of the steepest monetary policy rate hikes in Ghana over a decade. The monetary tightening affected consumer and business sentiment. We just spoke about softening of the consumer and business sentiment. The chart here shows one of the longest decline in our composite index of economic activities, with a reduction beginning somewhere in March 2021 all through to 2022 end of year. Right. In the face of the global supply chain disruptions and difficulty monetary and fiscal condition, amidst very high spending by government, we saw our inflation peaking at 54.1% in 2022. The cedi lost about 30% of its value relative to the USD. At a point in the year 2022, the depreciation was in excess of 70%. This graph shows the deteriorating external environment. Our capital and financial accounts turned negative as the external debt capital market was shut on us. Also in 2022, we saw very huge portfolio outflow as investors, fled our local bond scene and repatriated, their monies, outside. The only positive on the external side was the growth in our trade balance, which was driven mainly by increase in crude prices as a result of the Ukraine-Russia war. Gold also experienced good performance amidst, the flight to safety as investors, sought, refuge in safe assets. The difficulty economic environment led to a deterioration of our net and gross reserves. We spent a chunk, of our reserves in defending the currency to no avail. Government benchmark interest rates across all maturities also increased as a consequence of the tightening financing condition. Our Eurobond spread, spiked to record highs as all the three rating agencies, downgraded the country back to back to back to back. In managing your money, we took into account the difficult macroeconomic background to position your assets for growth. Our investment objective is to outperform inflation over the long term. And with a rise in inflation last year, we had to go to work to ensure at least, if not beating inflation, we preserve somewhat the value of your hard-earned money. Key tactical changes we made in your portfolio was to increase our equity allocation. We almost doubled our equity allocation compared to the 2021 end of year value. We also sold about 30% of our local government bond holdings somewhere May 2022 and bought into GHS Eurobonds. We again reduced our allocation in mutual funds because we saw things, getting out of hands, and also reduced our holdings in bank fixed deposits and allocated those to our Eurobond assets. As you see in this graph, we give a breakdown graphically of our asset allocation. Out of the 315.8 million in Government of Ghana bond we held, over half of them were in Eurobonds, and we'll see how this asset allocation impacted our returns in 2022. Again, this shows the evolution of AUM growth for the scheme. Now, given all the changes we made to your scheme, 2022 saw, the best year on record. Whilst, the average pension scheme in the market did less than 16% in return, your scheme did about 32.2% returns on average across all our three retirement plans. And this compared relatively well with average inflation of about 31 in 2022 and a 30% currency depreciation. Over a rolling 3-year basis, your scheme pulled a 21.7% return compared to inflation of 16.5 and USD depreciation of about 12% over that period. Again, on a 5-year and on a 12-year, rolling basis, your scheme has generated a healthy premium above inflation in line with what our investment objectives are. The good performance was driven mainly by our Eurobond holdings. right? We took most of our Eurobond positions in June when the currency hadn't depreciated much. And therefore, when the currency started depreciating from September, October, November, the scheme, benefited from this performance. At the point in November, our scheme's performance was in excess of 50% until we saw the reversal in the depreciation in December. As chairman already alluded to, because of our heavy concentration in Eurobond, which was taken, strategically. Anytime the currency moves relative to the USD, you'd see, some movement in your balances. But then if history is anything to go by, over the last 15 years, our currency has depreciated by about 15%. So we feel that position in Eurobond would, over the long term, preserve the value of your hard-earned savings. Now to our outlook and portfolio strategy for 2023. 2023 is also a bleak year, both for global market and our local market. We've seen demand destruction from new taxes, right? We've seen heightened cost of living. At a point, we all thought the inflation-based effect would kick in, given that inflation started spiking July last year, and that we'll see inflation softening from July this year. But it looks like our current inflation is sticky. We've seen slowdown in credit creation due to the impact of debt restructuring on bank. All these indicators implies that our GDP growth will lag our historical average of about 4.8%. As a matter of fact, when the minister recently read his budget, he revised GDP growth downward from 2.5 beginning of the year to about 1.8. This definitely would have an impact on your scheme performance, going forward. But then we remain, very resolute, and we are resolved to do whatever it takes within the constraints of the MPRA guideline to manage your portfolio for growth. In terms of our multi-asset view in the face of all this macro context, we are bullish in equities. We've seen the Ghana Stock Exchange Composite Index pulling a return of 17% plus, year to date. Your scheme was heavily invested in equities beginning of the year, and therefore those returns definitely accrues to you. We've seen banks taking a beating as a result of DDEP, which provides an opportunity to increase our equity allocations in some listed, banks subject to liquidity on our stock exchange. On the fixed income, bit, we are neutral to negative because really we've seen, banks' assets haven't been shaken by the DDEP. So we remain a bit conservative on that asset class. Treasury bills, given, where, rates are, is still, below inflation rate, but it provides an opportunity, to grow and manage liquidity for scheme members. Eurobonds, we are neutral. On corporate bond, that asset class is not well developed in the country. It's not that deep enough. So we keep monitoring our existing allocation, and when opportunities present ourselves and the credit is right, would invest. We are quite bullish on the alternative asset class. As the CEO already mentioned, our goal is over the long term, exposed between 15 to 20% of our asset in that particular asset class. So we keep working with our fund managers, looking, for opportunities to invest, for growth. So this basically reflects how we intend positioning our asset for 2023. And we are, very, positive that over the long term, this strategic and tactical changes in our portfolio will result in good growth, for scheme members. Thank you very much for your time. And I'll pass the baton back to Opare.
Thank you very much, Nanaya Febama, for giving us a presentation on the strategy for going forward. We'll take a second presentation from the independent auditor, that is John K. and Associates. But before he comes up, the representative come up, would like to remind you once again that please share your questions, your feedback, and any other comments you have with us in the chat box. We'll address them both in the chat box and also live on the stage. So Gilbert, if you are ready, please join me. Please let's give it up to Gilbert as he comes. Thank you.
Good morning, trustees. Good morning, scheme members. My name is Gilbert, and I'm here to present to you the independent auditor's report of the Cedar Pension Scheme for the year to 31st December 2022. And I'll start with the opinion. We have audited our company financial statement of Cedar Pension Scheme, which comprise statement of net assets available for benefit at 31st December 2022, the statement of changes in net assets available for benefit, and statement of cash flow for the year ended, as well as note to the financial statement, which include a summary of significant accounting policies and other explanatory notes. In our opinion, the financial statement give a true and fair view of the financial position of the scheme at 31st December 2022, and its financial performance and cash flow for the year then ended in accordance with international financial reporting standards and in the manner required by the National Pensions Act 2006, Act 766, as amended, and the Occupational and Personal Pension General Regulations 2011, LI 1990. The basis for our opinion, we conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are stated in the auditor's responsibilities for the audit of the financial statement section of this report. We are independent of the fund in accordance with International Code of Ethics for Professional Accountants, including International Independent Standards issued by the International Ethics Standards Board for Accountants, and we have fulfilled our other ethical responsibilities in accordance with the code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Mr. Chairman, if you permit me, I'd like to skip responsibilities of the trustee for the financial statement and those of the auditors for the audit of the financial statement and read to members the key audit matter. In accordance with the international standards on auditing, the key audit matter section of our report is intended to describe the matters communicated with those charged with governance that we have determined in our professional judgment were most significant in the audit of the financial statement. And the item we have identified is income recognition. The scheme generates income largely from investment of assets of the scheme made up of members' contribution, as well as the undistributed portion of assets of the scheme brought forward from the previous accounting period. Some of these investments straddle the end of the accounting year under review, and hence key consideration for the appropriate recognition of income of the scheme is the cutoff date. The income of the scheme for the year ended should be recognized only if they accrue or are derived during the year up to and including the year end date, being 31st December 2022. Income that accrue beyond this date should be recognized in the following accounting year. To ensure that in recognizing income, the cutoff date had been taken into consideration, the audit team performed the following procedures. 1, we reviewed the design and implementation of the scheme's income recognition procedure to determine the adequacy of controls over the scheme's investment valuation procedure and income recognition at the year end. We also obtained evidence of the existence and accuracy of interest income thereon of a sample of significant investment whose maturity date are after the year end by reviewing their particulars and recomputing the expected year-end interest income. And we evaluated the adequacy of accounting policies and disclosures on income recognized in the scheme statement of changes in assets available for benefit. Report on other legal and regulatory requirements. We have obtained all information and explanation, which to the best of our knowledge and belief were necessary for the purpose of our audit. In our opinion, proper books of account have been kept by the scheme so far as appears from our examination of those books. and the scheme have fully complied with the prohibited investment practices stated under Section 35 of the Occupational and Personal Pension Scheme General Regulation 2011 LI 1990 and all other requirements under the National Pensions Act 2008 Act 766 as required, and it as appears from my examination of those books. And the engagement partner on the audit resulting in this independent auditor's report is myself, Gilbert Ajete Lumufu, whose practice number is ICAG/P/1417. And I sign for and on behalf of John K. and Co., which practice number is ICAG/F/2023/128. And I dated it 28 April 2023. Thank you very much for your attention.
Thank you very much, Mr. Gilbert Lomote. We also want to continue reminding you to keep sending your questions, your comments, and then we'll address them. But before we take any more questions, we would like to take another presentation from the General Manager of Access Pension Trust. He is ready here with us. So Pakofi Ankoma, if you are here, kindly join me up stage. Let's take your presentation. Okay, whilst we wait for Pakofi to come, we'd like to take a question here, and somebody wants to know, he says, I'm now with an employer who has a different fund manager. I believe you are referring to a different corporate trustee. He wants to know if he can move his funds to the new corporate trustee or he should keep it with the with Access or the Cedar Pension Scheme. So the simple question is that lies with you. The law, Act 766, gives members like you and any other member to port your funds to a new trustee when you move. It's good, it helps you so that at retirement, you get to just complete one process and then get your funds, i.e., you don't need to be moving from one employer to another one. And also, we'll also use this opportunity to remind anyone on the call who has funds elsewhere with another trustee to also bring your funds to the Cedar Pension Scheme. That is your tier 2 pension. One advantage with doing that is that whilst going through our life, if you fail to move your funds, if death should happen, and we don't like to hear about it, but death can happen at any point in time, your family members or your beneficiaries might not remember to visit all the companies you've worked with. They might only go to the very recent one. And that means that whatever funds you had with the previous employers might be sitting somewhere, whereas your family members, your dependents will need it. So we want to encourage you that it's a very good practice to do that. So the answer is a big yes. Please move your funds with you wherever you go so that at retirement you can consolidate that. We have a few other questions, but we'll be taking them after Pakofi's presentation. Pakofi is ready, so we'll take him. As he comes, please, let's give him a big applause.
Thank you very much, Mr. Noy, and good morning to everybody. Good morning to you, trustees, as well. This is the first time actually we are doing a presentation on some of our innovations, and I think it's on the back of feedback we got from our last open forum. As trustees, we have a responsibility to provide you access to information on your scheme as and when you require. And we have invested heavily over the last few years. It is our belief that as a member of our scheme, if you do not know what is happening on your scheme or on your account, we have failed you as trustees. So our investment has been heavy to ensure that at the convenience of your home or wherever you find yourself, you should have access to scheme information. So we've rolled out a number of digital interventions. First of all, let me introduce you to the Access Client web portal. This Access Client web portal can be accessed on any browser. Just visit our website, accesspension.com. and go to the member login as a member, and as an employer, you can also log in as an employer if you have employer access. Now, it is a secured and user-centric platform designed to empower you with comprehensive control and access to your pensions account. Now, to access this platform, once you visit the website, the link has been provided in our slide showing. You are required to log in either with your member ID number or your SNIT number. And for those who may be from controller, of course, you have other numbers that you can use to log on. Once that is done, it will require for a phone number and email address and an OTP. A one-time password will be sent to that phone number, and you would enter that to access the account. For employers, once you come onto our scheme, we provide you with a username and a password, which you can use to access. Now, we have various features, and for those who have accessed our web portal, I'm sure you can attest. You could have access to member statements and scheme reports. These annual reports that we've just shared for 2022 financial year, you can have access to that on our web portal. There's also the scheme library and other documents. On a quarterly basis, we publish what we call the fun fact sheet. These are reports that we dig very deep to provide you insights on what is happening on the market. These reports are available since inception till date. On a quarterly basis, you can find that report also there. Sometimes you hear people say, oh, I want your form. I want a form. There are forms there on the web portal that you can access. And these are all in the scheme library and documents. If you need any help for some reason, you could easily get somebody to assist you directly on our live, through our live chats on our web portal, as well as for employers. We require employers to upload contributions using our web portal. We have a policy in Access that says no voucher, no contribution. If you do not generate a voucher by uploading your contributions onto our portal, we don't expect you to make contributions or payment to our custody accounts at Zenith Bank. Luckily for us, we have our custodians here. They are aware of this policy, and as much as possible, we try to ensure that if you do not have a voucher as an employer and you do not upload your contributions, you should not be able to make payments. So that's it on our web portal. We've replicated a lot of these features on our web portal into what we call the Access mobile app. And I'm happy to say during our recent survey that the Access mobile app is the most used digital platform from Access by our clients. On the Access mobile app, we recently upgraded the Access mobile app to give some enhanced features so that you have a lot more you could do on the mobile app. I'm happy to say that you can now open a personal pensions account on the Access mobile app. So if you do not have a personal pension account, you can open a personal pension account to augment what you already have under the Tier 2 pension scheme. You could easily make additional voluntary contributions if you're a member of the personal pension. Of course, with Cedar Pension Scheme, it is an occupational pension scheme, so you may not be able to do additional voluntary contributions. By law, you are required to make 5% of your contributions into the Cedar Pension Scheme. You can't do anything more than that. But if you want to do something more than that, the Access mobile app gives you that opportunity to enhance your contributions. You can have access to your member statements and scheme certificates. Some people come on and say, there's no document to show that I'm a member of the Cedar Pension Scheme. That is available on the Access Pension mobile app. So please download it. It's on iOS and Play Store, Google Play Store. You can easily have access to all the information that you want. You could update your beneficiaries and other information. And you could also do what we call the paperless withdrawal. You don't need to complete a hard copy form. The world is advancing. All you need to do is go on there and complete the paperless withdrawal form. And within 3 days, we should be able to pay you out. If your excuse is that, I don't have a smartphone to do a mobile app, so how else can I access your services? As I said, we've invested to make sure that the last and the least, in quote, relevant person still has access to his information or her information under the Cedar Pension Scheme. So we provided you what we call the short code. star 1860 hash. Star 1860 hash is a very simple way of accessing your accounts with Access without necessarily having to use a sophisticated phone. Now, when you dial star 1860 hash, it will be required to register your number with the service. It is free. When you're asked to register for the service, it is free. Once you register for the service, of course, we should have your phone number in our system. If we do not have your phone number, you just send a message to us through enquiries and we'll respond, or we'll get somebody to call you to update your details in our system. And you have access to a wealth of the basket of opportunities that we provide under the star 1860. Now, I think during last year, we announced that we have introduced the free life insurance cover. The free life insurance cover is still active for members on our scheme that are past medically incapacitated, or for some reason, God forbid, they pass or die before their retirement. The Access free life insurance cover comes and kicks in and pays you a sum assured of 5,000. You do not contribute anything. That is why it is free. Access takes up the cost, and it's just an incentive. It's an additional incentive for members on the Cedar Pension Scheme to enjoy. It is a privilege that you would get as a member of the Cedar Pension Scheme, and you will not get this anywhere on the market. Finally, we are happy to introduce a very great innovation called the Access Free Payroll Support. A lot of employers like yourselves have issues with data management, payroll deductions. Sometimes you're uploading the contributions on our web portal and then you have problems with it. The payroll solution is there to help you. Now, this payroll solution is web-based. You don't need to have anything special. Just have a computer, access to the internet, and you can access it. It is designed to support you, the employer. You can customize it to your specific needs, grant access to the various people that, or various authorities, or even third parties that you want to grant access to. This is going to be a complimentary service that we are going to grant to all our clients on the Cedar Pension Scheme. So for those of you who will be interested in having access to the Access Free Payroll service, please just send us a message on the chat box, and then we would get back to you. It is very flexible. It accommodates different payroll scenarios. And the good thing is that the file generated on the payroll system is easily, or it integrates directly into our CRM. So you don't need to do anything else. Just upload it and it's gone. Thank you very much for your time.
Thank you very much, Mr. Pa, Kofi, and Koma. We want to remind you that this is the annual Open Forum 2023 for the Cedar Pension Scheme. We have most of your questions. We still encourage you to bring more of it. So we want to take a quick question and then answer to that. Then Nana Yafi will be helping us answer that. And then afterwards, Pagofi and Koma will be also helping us answer the rest of the questions. So Nana, a client has asked that in our last webinar, and I'm reading it as he wrote it. In our last webinar, I understand you had to withdraw all interest that was accrued in the tier. I couldn't attend the meeting, but I'd like to know the status of that exercise. I think the person is referring to the... Nana, please, you have to join me because of my... yes, please. So, yeah, thank you.
Thank you very much, Opari, and thank you for the question. So, yes, when the government announced the debt exchange program, they suspended servicing of our debt, i.e., the government bond we held. So as a prudent, trustee, we stopped accruing interest on members, holding, right? Both for the local bonds we held and the Euro bonds, where up till now, the interest is still in suspension. However, somewhere, I think April this year, government, paid some coupons on some of the old bonds, and we started accruing interest on our local bond, holdings. But then as we speak, on the Eurobond side, we still have suspended the accrual of coupon because from last year, November to date, there hasn't been any servicing of the Eurobond. Now, what is the impact of the suspension of the accruals on your return, right? From the presentation I did, you'd realize we have close to 30-35% of our holdings in Eurobond. If we are not accruing coupon on those Eurobond, it means about 35% of your assets are generating zero interest. So your return will be depressed because of that portion of the asset that is not generating any income. However, like the CEO mentioned, we did the Eurobond because we believe at the end of the day, the investors within that market are in a better position to negotiate a better term. And we are hoping that somewhere in September, as has been announced, if the negotiation with the external bondholders complete, an announcement is made, and we know government is going to start servicing those debts, we would reverse and start accruing all the coupon we've held since November. So yes, we announced that we were not accruing interest on our Government of Ghana bond holdings. On the local side, we reversed, that announcement and started accruing, coupon. On the Eurobond is still, the case. And don't forget, our Eurobond is 35% of our holding, which definitely would have an impact on your return for 2023. And so government reverses or starts servicing the Eurobond debt. Thank you.
Thank you very much, Nana Yafe, for that. So Pakofi will be joining me to answer two questions which are somehow related, and I'll read them quickly. So someone wants to know, he has a company of about 40 experts, and he wants to know if there's a way he can register them so they can contribute to a pension scheme. And the second one is asking that he's a private school owner, and his employees usually leave very frequently. He wants to know if it is still necessary to register them for a pension scheme. Pakofi will take that for us.
Thank you very much, Opare. Before I take these two questions, my attention has been drawn to a slide that I missed, and I think it will put things into context whilst I answer these questions. We want to encourage employers and employees to augment their pensions through the Access Pension Plan. Now, let's look at some key statistics. According to SNIT in 2019, 10.5% of Ghanaians 60 years and above receive pensions in Ghana, just 10.5%. And that is a very big red flag you need to look at. 25% of Ghanaians or the retirees earned between 3,000 and 300 and 400 cedis per month. I don't know how many people on this call may survive on a monthly basis with 300 or 400 cedis per month. 50% and 600 Ghana cedis or less, or earned as of 2019. And to put things into better, about 78% of those retirees were earning under 1,000 cedis. 1% of retirees were earning 5,000 cedis or more as of 2019. But let's bring it to 2022. 95.5% of pensioners are paid 2,500. Somebody will say, oh, as at 2019, maybe the dollar against the CD. But 2022, based on SNIT data, 95.5% of pensioners are paid less than 2,500 Ghana cedis a month. I don't know how much you earn. I've seen a few of us and how much we earn. I don't know how much 2,500 cedis or how far 2,500 cedis can do for you. Employers, of course, the responsibility to ensure you have a decent retirement is yours. It's not for your employer. But depending on where you work, some employers come in and encourage you or help you to augment your retirement through collaboration. You come together with your employer and set up what we call a provident fund. But if for any reason your employer may not be able to support a provident fund, I'm here to introduce to you what we call the Access Pension Plan. The Access Pension Plan is a personal pension scheme licensed by the National Pensions Regulatory Authority to help employees like yourself, myself, do a bit more beyond what we are earning under the mandatory pensions regime. Or now, let me highlight some very key important. There's something called income replacement ratio. If you should stop working today, you're expected to take home or to live on about 70 to 80% of what you were earning before you retire. In Ghana, under the SNITs, just looking at the SNITs tier 1 and tier 2, you'll be lucky to even get 50% of what you were earning. Now, 50% of what you used to earn, as I said, 2,500 Ghana cedis, is not going to be adequate for you. Trust me. So you need to augment it. The personal pension gives you that avenue. Consistently over the last few years, since inception in 2013, the personal pension has returned a compounded return of about 20.9% on year-on-year basis. Last year, it did about 32%, and that is very impressive. Who should sign up? As I said, it is for every worker. If, as an employer, I think the question that came in, an employer is asking, can I find an opportunity, or where can I put money and a savings scheme? Yes, the personal pension is an opportunity for you, the employer, to put money down for employees who you feel come in on a short-term basis. And this is still under the 3-tier pension system. So you have a way to keep your employees saving towards the personal pension or their pensions. How can one contribute? Our mobile app, our digital apps are there, but we require you to have a direct debit on your bank account that will be deducted on a monthly basis and fund your account. When can I withdraw? There are rules and terms, so you can send a message to us on the chats, and then we'll respond to you with some rules and terms. You can also sign up easily by calling our call center 0302-738-555 or 0800-00-1860, and you'll be assisted. So back to the question that was asked. My company has over 40 experts. We would like to know if there is any package in terms of service. The personal pension is available for them, but under the pensions law, experts, if they do not have any reciprocal arrangements from their country with Ghana, they are expected to pay the mandatory pension schemes. So they may pay the tier 1 and tier 2. There are provisions within the pensions law that allow them to access their benefits as and when their contracts expire and they are leaving to their respective countries. So you are required to contribute tier 1 and tier 2 on their behalf. We are happy to get in touch with you to start enrolling you on the tier 2 pension scheme to ensure that you are compliant with the law. As a private school, most of our staff work for a short while and leave to school or other places. How would they be able to have access to their contributions? As an employer, what role can I assist? Your role as an employer is to make sure that you make the contributions on their behalf. When they are leaving, there are provisions within the pensions law that gives them the opportunity or access to take their benefits. Now, for you to take your benefits under the pensions law, the law says that you should be 60 years. So let me speak specifically for tier 2, 60 years retirement or 55 years, mandatory retirement or 55 years voluntary retirement. God forbid you should pass, you should die before you should access it, or you should be past medically incapacitated. If, however, you are 50 years and above and you are unemployed, for some reason, you are unemployed and you can't seem to get a job after 6 months, you can apply through the labor office for your pensions to be paid. You don't need to wait till you are 60 or 55 years. You can apply to access your tier 2 benefits. And for a foreigner, if you are permanently emigrating from the country, you should have access to your tier 2 pension benefits as a lump sum. It will be paid to you directly, and then you can take it to your home country or wherever you come from. Thank you very much.
Thank you very much, Kofi. Please don't go very far. There's a very last question for you. But before that, there's a question here. The person says, I would like to know if Axis has plans to allow members to make partial withdrawal from the scheme. Part of you already enumerated the conditions that allows a member to withdraw. So it's not a decision of access, but it's rather the law, which means that until you qualify for any of the conditions, you are unable to withdraw. Pakofi, someone would like you to throw more light on is it a package for deceased members? I believe it's referring to the insurance benefit. Yes, please.
Thank you very much. So what we are saying at Access is that because you are a member of our Cedar Pension Scheme, and we love the fact that you're a member of our pension scheme, we have taken an insurance policy to cover you. You are not paying for anything. You are not paying for the policy. Access takes up that cost, and we ensure that if you should pass as a member of our scheme, that means if you should die. I don't like using the word die because it connotes very negative terms. But if you should pass or you are past medically incapacitated, that means a certified doctor within the country of Ghana, normally through the SNIT medical board, would have approved that Mr. Mensah, let me not use Mr. Mensah, Mr. Trump, Mr. Trump has been, for some reason, cannot work again. Physically, mentally, he cannot work again. His beneficiaries or himself would be paid out his entire pension benefits, and will give you an additional 5,000 cedis through the Access Free Life Insurance cover, which is underwritten by Hollard Life Insurance. So this is an additional incentive that we give you as a scheme member to ensure that you continue, you focus on saving towards retirement, whilst and not just disrupted. Thank you.
Thank you very much, Pakofi. Mr. Trump is in trouble. So there are a few questions. I'd like to read them quickly. Someone is asking if there are any fees or charges when a member is withdrawing from the scheme. So already, as we mentioned, the conditions that allow you to withdraw are the ones that Pakofi enumerated. And under those conditions, you are not charged. There is no fee, there are no charges on any withdrawal that you make from the Cedar Pension Scheme. As the next question is asking, so do employers contribute for expats also? In that case, when they are leaving the country, do they also leave with the tier 2? Yes, Pakofi just mentioned that. So if you have expats in your employment, the law requires that if they do not have a pension scheme in their home country, then you're supposed to contribute for them. When it's time for them to leave to their home country permanently, the law allows them to withdraw from their tier 2 and then leave with it. And we'd like to remind you that this is the annual open forum for the Cedar Pension Scheme. We've listened to a presentation from Nanari Afe. He shared with us the performance for last year and the strategy for this year. Then we also heard from the independent auditors, as well as an opening address from our CEO and also the chairman of the board of trustees of the Cedar Pension Scheme. We're getting to the very, very end, and I'd like to highlight on a few things, as part of you already even have mentioned, and one of them being the need to update our beneficiary information. This is very, very dear to us because we, in our interaction with employers and employees on day-to-day basis, one of the very painful exercise we witness usually is family members, beneficiaries, dependent, going through hell to get the funds that belongs to their late employer. By law, if you are an employee, and you leave a beneficiary, i.e. you complete a beneficiary form, you have done your beneficiaries or your dependent a very big service. In other words, you've done them well. Let me use that word in quote. All they have to do is to present themselves, complete a one-page form, add their ID card, and Access will make sure that they receive your benefit in the percentages that you have stipulated. So say you are Mr. Trump again, and then you've taken the lead in heaven before us. and you said we should share your properties or your Cedar pension scheme, your balance or benefit in there as follows. Your wife, 50%, your first son, 30%, your daughter, 20%. That is how we will do it accordingly, exactly as you have said. However, in the event that you fail to do this, and a lot of people do that, your dependent will have to go through a process. They would have to obtain a letter of administration from a court or any legal entity that is empowered to do that. Sometimes the fees they are charged, the most recent one I saw was about 18,000. It was very shocking, but the lady sent the receipt to me to confirm. So imagine going through all these processes just to get your benefit, something you could have avoided by completing a form. So please speak to your employer and complete a beneficiary form. The good thing is that you can also do it on our web portal. So you visit our website and then navigate to the web portal. You can update your beneficiaries. You can add on and remove. If you think your first son is very stubborn and you want to change him, you can do that. So that's just a joke, but there's a provision, there's arrangement that we have made for you that you can do it online. You can do it by completing a form, and that will be updated so that in the case that you decide to take the leave before us, you take the leave to heaven, your dependent, the people you leave behind, will be well taken care of. On that note, we'd like to thank you very much for joining us for this year's edition of the Annual Open Forum for the Cedar Pension Scheme. At 11:30, that's about an hour from now, we'll be holding the second one, which is the Cedar Provident Fund. So if you're on the call and you are a member of the Cedar Provident Fund, we invite you to join us again at 11:30 so that we all go through the annual open forum for the Cedar Provident Fund as well. We'd like to thank you so much for joining us. We want to remind you to continue using our digital platforms. We have the web portal, Pakofi talked about it. We have the mobile app, we have a USSD code and other information. You can also speak to your employer anytime you need more information or you need to contact us. We'd like to invite our pastor for this session, which is our brother Cyril Nkrumah, to give us a closing prayer as we bring the program to an end. Let's clap for Cyril as he joins us. Thank you.
Shall we pray? Father, Lord Jesus, we are very grateful for this session. We are grateful for all the participants and all the panelists. We are hopeful that will be fruitful in the future of the company and the deliberations with our clients. We give you praise, we give you glory, we give you honor. Amen.
Thank you, Pastor Cyril Nkrumah. All right. So we'd like to say a very, very big thank you for joining us. And this is not going to be the last. This is the 5th edition. Next year will come your way again with the 2024 edition of the Cedar Pension Annual Open Forum. Until then, see you in our engagement. Thank you very much.